everyone, here's Mahsa from coinIX. coinIX is a blockchain investment firm based in Hamburg, and today I'm going to interview one of our portfolio companies, Frictionless Markets, formerly known as DEFYCA. We have Pat here, one of the co-founders of the project. Hi, Pat.
Good morning.
It's great to have you here. Thank you for accepting the offer to do this interview. First of all, would you please introduce yourself and tell us how did you end up in the blockchain industry and what is your story?
Well, my name is Pat Hourigan. I'm the founder and CEO of Frictionless Markets. My background, I started out in finance. I spent maybe 20 years in technology, various roles. I was at IBM, GoGo InFlight, wide variety of a background. My interest in blockchain really started kind of 2013, 2014. I was just really curious about Bitcoin, and as Ethereum launched, got quite interested in that. I spent a period of time in research with Hyperledger. Beyond that, as the crypto bull run started, I think everybody was interested in it. It's just an amazing wealth creation tool around that period of time. Of course, it didn't last. So I was quite interested in just the technology behind it, and then later on interested in the market functions around crypto. I guess from Frictionless Markets point of view, as I looked at the blockchain space and the technology, it had become very obvious to me, and I think obvious to many others, that the technology would be very useful for the traditional finance markets. I sort of observed the 2018 STO craze that never really seemed to take off, and I came to sort of two main conclusions. One, it didn't take off because you didn't have the market hadn't formed. It just wasn't there. The technology was largely there, and it's gotten better in the past 5 years, but the market didn't form because you didn't have the participants. And you ask the question, why were there no participants? And it's largely because the regulatory framework wasn't there. And that's changed, right? That's been the biggest change in the last 5 or 6 years. The technology's gotten better, and acceptance that the technology can solve certain market functions. And now you have these regulatory guardrails that permit the activity. So I think there will be a version 2.0 of security token offerings that will stick this time. So look, that's sort of a very high level of how I ended up in this current position.
Interesting. Yeah, you entered the space around 2013, 2014. That's pretty early. I think you have seen all the ups and downs of the market, and that's amazing. You know what's coming. I'm going to move forward. Before I start with the main questions, I just recently noticed that most of the names on the website that were DEFYCA have been changed to Frictionless Markets. Can you explain a little about this rebranding?
Yeah, so I guess it was always our intention to do it. It comes down to structural decision within business. We operate out of Luxembourg. We're a full Luxembourg structure. There are really two sides to the business. There's an IP company, DEFYCA Labs, which produces the technology. And then there is the operating arm, which is Frictionless Markets. Frictionless Markets is effectively the trading company. It's the company that manages all the securitization structures. It's the company that has all the cash custodian accounts. It's the company that will engage directly with managers and GPs. So it's always been our intention to get to the point where once we had technology that functioned and we had the infrastructure, the financial infrastructure in place, that we would switch over to Frictionless Markets. So that happened about a month ago, and into Q1 next year, as we start to tokenize different manager portfolios, you'll see a lot more activity under the brand Frictionless Markets.
All right. So it means that DEFYCA still exists, but it's going to be the parent company of Frictionless Markets, right?
Yes, it's how it works. It's just basically it's a corporate structure. You've got a holding company, and then left and right, you have your IP company and your trading arm.
Now, I want to go a little deeper into your project. Would you please explain what your project does, but try to explain it to your grandmother, somebody who has no idea about financial instruments or blockchain? How would you say that?
Yeah, okay. Look, it's quite a difficult thing to do. We work in a pretty niche area of the financial markets. We operate in the private markets. So I guess, you got to start with a basic explanation of what are the private markets. Private markets are, well, they're very descriptive. They're private, which means that they're not public. They're generally preserved for institutional investors, and it generally falls into one of maybe four classes of assets. So it's private equity, i.e. investing in private companies, taking equity positions in them, companies like coinIX, for example. Secondly, private infrastructure, which is a very large asset class. This is providing finance for infrastructure projects. So there might be greenification projects, replacement of wind farms, solar projects, renewables. It could be, long-term infrastructure projects like elderly care homes, etc. So that tends to be the cohort of private infrastructure. Private credit then is different. It's a broader asset class, kind of slices into two, so-called sponsored and non-sponsored lending. Basically, it's providing loan facilities to private companies. An alternative is to go to a bank and try and get access to finance that way. Sometimes that works, sometimes it doesn't work. There's a general trend in the financial markets where banks are lending less to companies, and there's a few reasons for that, but the trend has been since the global financial crisis back in 08 and 09 that less lending has been conducted by the main banking lenders. So into that market is that lending companies, right, is the best description for them. These tend to be very well run, very well managed, partner-led firms that have a very specific niche understanding of an area. So it might be SaaS-based companies, or it might be could be manufacturing companies, and they'll go in and they'll provide loan facilities in there, and they'll understand the underlying debt exposure of these companies, and they'll manage those loans through to maturity. That in general is private credit. There are different flavors and different varieties to it. And then finally, you've real estate. So if you bundle those main asset classes together, they form the private markets. The private markets have been growing at a pretty phenomenal rate since 08, 09. If we take private credit alone, today it's about 1.5 trillion in size, and it will add another $1 trillion of transactions per year over the next few years. So it's a really fast growing market, and there's a lot of institutional interest in it. If I was explaining to my grandmother, I would say that your pension that you're now spending, your hard-earned pension over the last 20 years, a good portion of the earnings in that pension pot have come from investments in the private markets. So that's the private markets. What you're seeing in a mega trend in the private markets is trying to get more investors to understand the asset classes and to invest into them. This is the so-called democratization. So once where it was just very, very large pension funds that could invest into private market funds, now what you're seeing is some good examples. A really good German company called Moonfair. They allow investors, individuals, to invest into the same funds that pension funds invest into, for example. So you get the same upside, and the idea is that you're investing alongside some of the most savvy investment houses worldwide. So that's the private markets. I guess what do? We make it a lot more efficient. So there's a lot of inefficiencies within that marketplace. There's inefficiencies around origination of deals. There's inefficiencies around the operation of the fund structures, which can be quite complicated. And there's inefficiencies around drawing in cash from investors, so-called capital calls. So what we do with our technology and with our fund infrastructure is we make it more efficient. We make it more efficient in a couple of ways. So we reduce the cost of KYCing investors. So when you bring an investor into a fund, there's a bunch of regulations there for the last 20 years, and they've been sort of hardened year on year. Anti-money laundering, Finance Against Terrorism Act, you've all these different legislative functions that you've got to meet. What we do with our technology is make it easy to onboard investors, and we make them sticky within your fund. So if you've got Fund A and Fund B, and another company has another fund, when you onboard through our fund network, you end up with one identity. That identity follows you around, and it's very easy to maintain and manage, and therefore it's much cheaper to onboard customers and onboard investors into the fund. That's the first thing. It's a very sort of trivial thing, but it makes a big difference in the day-to-day operations of any fund. The second thing that we do is we tokenize a fund. Some people will be very familiar with this term. The basic idea of a token, to simply explain it, is it's just a digital representation of a share in a fund. Now, shares have been digitized for a long time, but there's a specific flavor and form factor with tokenization that makes it easy to transfer the true store of value of the fund. So the basic principle with tokenization is that once you provide a token format of the fund, you make it very cheap to distribute that store of value. So you'll have seen for, over the last 10 years with Bitcoin, Ethereum, all the different altcoins that are out there, it's very simple and cheap to transfer value between two people in the network. The basic principle of tokenized securities is that you take that principle and you apply it to a regulated space, and you still gain the efficiencies whilst having a compliant infrastructure. So let's talk. The second thing we do is we tokenize. The last thing we do, which is really important, is actually something that we only launched yesterday on Avalanche, our institutional deposit token. So anyone who's ever handled cash operations within a fund will just identify how difficult it is to draw in capital and then to reconcile it and to issue the security against the cash that's coming in and then to settle it later on. And one of the major benefits of smart contracts is automation, right? It's a very simple form of automation, but it's very powerful. So what we provide from a technology and a fund infrastructure perspective today is we've got deposit tokens, which represent real fiat currency, real money, in one of 8 currencies: euro, dollar, pound, Swiss franc, AED, yen, Sing dollar, and Hong Kong dollar. We have currency ledgers that represent those currencies in the real world, and we have a token format of them. The big benefit of that is as investors invest into funds, they're using the token format of currency to do that. And that reduces the burden of KYT, which is know your transaction, which can be very slow. You may get a transaction stuck one bank to another bank. Because all of our network is permissioned, everybody is pre-cleared into the network. Your KYT solution is pretty instant. It's very simple to manage exclusion of an account where you might have a suspect transaction. I guess the second thing is it's substantially cheaper. You can move money now on the blockchain, real money, euro to dollar, dollar to pound, and you can do it for about 25 cents a transaction. In contrast, that could cost 80, 90 euros if you're using the existing SWIFT payment system. So it radically reduces transaction costs and it speeds up the execution of transaction. I guess the final element that's useful is reporting. One of the big challenges is in sort of the Web 2 world or the non-Web 3 world, you've got lots of different solutions for providing reporting functions, and they're fine solutions, but the problem is often data aggregation. You've got data, you're talking about portfolio level data of the fund, you're talking about, the investment analytics, all that data is spread out in different databases. When you put that onto a blockchain, you have a single point where you can source the truth of the transaction. So that increases your forensic auditability. It increases your capacity to be able to provide reports, knowing that you have the source of truth. So that might seem like a small benefit, but it's actually probably one of the biggest benefits. You compound all of those characteristics together, you end up with a really, really efficient market function. And markets love efficiency, right? They always drive towards efficiency, whether it's a public or a private market. So when you have a more efficient market, you tend to have more participants. And when you have more participants, you tend to have more liquidity. So it's a function of a function of a function. So I don't think my grandmother would understand that.
Yeah, she probably won't understand that, but it's
Yeah.
hard to explain any financial concept to someone who has no experience in it. But these solutions that frictionless markets or DeFiCa are offering is really diverse, but we can say that frictionless markets will expand the crypto economy by providing capital flows from the crypto world to the real world, and there will be no exclusion of investors due to high minimums in private credit markets. I think that's amazing. But is there any specific moment that made you realize I need to do this? This is the project that I'm going to make. I mean, what made you think of the idea behind frictionless markets or DeFiCa?
Yeah, that's a good question. I think there's 2 answers. There's a professional one and a personal one. I guess the professional one is very simple. We started our business on a body of legal research, right? Not on a technology. We didn't sit down and just create a piece of technology and said, "Oh, well, how can we make this useful?" We started on a piece of legal research. My co-founders, Alex and Brendan, we had been researching different jurisdictions where you could legally tokenize a fund and you can legally distribute that fund. We found, we did an extensive body of research, lasted about 7-8 months. We looked at all sorts of jurisdictions, all sorts of quasi-structures, and we hit off on Luxembourg. The catalytic event for us was blockchain laws in Luxembourg. And look, basically, what are the blockchain laws? They're extensions to securitization laws. These securitization laws have been around since 2004. They are the laws that enforce and enable securitization structures in Luxembourg. It's a huge industry there. It's a massive ecosystem between everything from banking, accountants, fund accountants, the legal services. It's probably one of the world's top securitization locations next to Cayman Islands. So the blockchain laws, they were extensions to securitization. What they basically allow is for a token holder. There are 3 versions of those laws, but the one that sort of makes the most sense to us And I think anybody who's looking at tokenized securities should really understand the legal parameters that you can operate in, because that's going to define whether or not your project and your business will take off and succeed. For us, blockchain 2, very simple law. It basically states that a token holder has the same legal and economic rights as a traditional investor into a securitization vehicle. So it's very simple, but it's very profound law. It means that if you produce a token version of your fund, if you hold that token, you have the same legal and economic rights, and it's testable in court in Luxembourg in the same way that you would have if you were a traditional investor into a traditional note. And so that's from a professional point of view, that was the catalytic event. And from there, we set up our companies in Luxembourg. We set up fund infrastructure, opened fund clearing accounts. That's a fun experience. Anybody's ever done it. It takes about 500 times longer than you think it will. It's quite stressful. But we have all that infrastructure in place now, and it enables us to carry out our activity on top of the technology that we've built. I guess from a personal perspective, COVID, maybe most people don't want to go back and remember COVID, but COVID was sort of a weird time, right? I had been working at that moment in time. I was with an Indian consultancy firm. It was going well. I enjoyed it. COVID hit, and I think I just, I was at home with 2 kids, wife. We live in the countryside. There's only so much painting you can do. There's only so many garden vegetables you can plant, and I just got bored, and I'm one of these people that if I get bored, I tend to just fixate on something. So I just sort of one morning got up and I was doing something outside, planting more vegetables or something, and I just said, "Look, no, this is it. We're gonna do this." And I met Alex, and I'd known Brendan for a long time, and I just said, "Guys, look, come on, let's have a crack at this." So it took us sort of a year of just navel gazing, trying to figure out, well, you want to do something. What is it you want to do? Yeah, we just, a process of iteration. We just singled down, focused in on this area, said we were going to learn everything about this area, both from a market function and a technology function. We conducted, literally thousands of hours of interviews with what are now competitors, interviews with potential clients. We just did a lot of hard yards and just really figuring out what are the problems here. Once we had a clear understanding of that, we said, right, well, it's pretty obvious what to do. The obvious solution is to build a fund network that enables GPs to very cheaply issue their funds and to attract investors on a global basis. Now, it's easier said than done, but it took a lot of hours, just man hours, just footwork, just getting in there and figuring out what to do. So that's kind of the genesis of it. It started with boredom and COVID, I guess.
Yeah, indeed. I think during COVID, many people have started learning new skills, or the people who were not in the blockchain industry, some of them actually started to learn more and come into the blockchain industry because we all had a lot of time, and that makes sense. It was actually the story from my side as well. It was the beginning of my career in the blockchain industry because I had a lot of time and I started learning about blockchain, and you had the idea of creating a new project. So I think that was the beginning of many new encounters in the blockchain industry. Would you please explain what problems exist in the market that DEFYCA or frictionless market is trying to solve?
First of all, the market is extremely broad. There are thousands of different PE companies, VCs, private credit. Credit is interesting now because, basically interest rates are higher. Credit is a floating rate product, which means that, there's a base rate, the Euribor rate or the Fed rate, it's the margin above that, right? So it tends to ride an economic cycle. And so that's why it's interesting. The market is really broad. There's just so many, even within credit, there's so many different styles of it. So your first challenge within the market is to figure out which part of it you go after, and that will change over time. For us, we focus on credit and infrastructure, right? Private credit and private infrastructure. If you look at that market, what are the challenges? There's always a challenge with raising capital. Anybody who has got a VC fund, you look at coinIX. I'm sure you guys are out trying to raise money. It's a brutal time to raise money at the moment. So unless you have a differentiated product, it's going to be difficult to raise in this current time. If you look at the challenges in the market today, the first challenge that we see across the many GPs and managers that we've spoken to is that, first of all, their operating expenses are high in comparison to what they could be. So that's a problem, that presents an opportunity. Secondly, it's going to be difficult for them to try and distribute that product into the next level of investors. So it's fine if you're trying to sell it to a pension fund that will write you a check for 200 million. But if you try and sell your fund to investors in lots of 10K or $50,000 or 50,000 euros, it's going to be difficult for you because you don't have the distribution network. Those are the two basic challenges, right? What do we do to try and solve that? Look, first of all, from an efficiency perspective, I mentioned it a few minutes ago, what we focus on is providing an efficient market solution, right? That is what we do. And we do that across the three major functions that a GP or a manager will come across as they issue and manage their fund. It is onboarding customers, investors, right? Reducing the cost of that, radically reducing the cost of that. The second thing is being able to structure your fund. Our infrastructure in Luxembourg can launch a fund on our infrastructure for less than $30,000 in comparison to some cases it might be $250,000. There's a substantial saving there. We believe that will increase the level of micro funds that are being offered, right? So instead of having to create a behemoth fund of $1 billion, you can launch a fund at 50 or 100 million, and that's a big difference, right? So you can execute a lot more quickly. The third thing is managing the day-to-day inefficiencies within a fund. So the solutions that we have around cash ops, the solutions that we have around settlement, the solutions that we have around KYT, they all help radically reduce the total operating expenses of a fund. And when you reduce the operating expenses of a fund, you stand a better chance of being able to distribute it in smaller levels to more investors, right? Because it's just cheaper to do it. So on the distribution side, a couple of weeks ago, we signed a deal with a UK placement agent called First Avenue. We're really just super excited about it. It took a long time to get it over the line, but we're really excited about it. We feel really privileged that First Avenue trusts us to be able to look after their customers. First Avenue is a global placement agent. They're based out of the UK, the United States, Hong Kong. They have presence in Japan as well. They've placed about 30 billion worth of private credit and infrastructure deals. So they are specialists in being able to take private infrastructure and private credit funds and distribute them to investors. And so they have a long track record, very well established track record of doing that. And I think the thing that was sort of most exciting for us is that it's the style of funds that they handle. They handle really only the best funds. So when you're looking at product, the best financial products, it's a challenge in the market. How do you find the best financial products and provide those to customers on a global basis? We have another catalytic event. The first catalytic event was uncovering of the blockchain laws. Our second big catalytic event is uncovering First Avenue. And it's our intention to go out and to build a big distribution network global with more agents, not just First Avenue, but also to bring in more placement agents, more wealth managers, more wealth distribution agents on a global basis. So we can take the best financial products in private infrastructure and private credit and distribute those to investors. So the challenge is most funds want to be able to do that, right? They want to be able to take product and distribute it to fill their fund quickly, right? They want to be able to do that, but they don't have an infrastructure. And that's where we step in. We see that is the gap in the market. We're not the only ones. There are other competitors doing it as well. But I think what's interesting about what we have is that not only the technology, but we also have the financial infrastructure and the legal and regulatory posture to be able to carry it off as well. So that's the gap, and that's what we're going to fill. And I think the whole space is going to be really interesting in 2024. You're going to see a lot of firms stepping in and trying to provide similar solutions. Some will be successful, some not, but it's certainly going to be a very, very hot 24.
Indeed, yeah. Access to risk-priced funding is insufficient and really slow, and some crypto investors have become reliant on volatile, over collateralized lending opportunities. And I think frictionless markets can really change this situation, that the investors are choosing riskier investment forms. You mentioned something regarding your partnership with First Avenue. Could you please give more details about this partnership? I'm really excited to hear more about it. And if there is any other recent updates or advancements that your project has done.
I guess we started talking to them about a year ago. As part, I mentioned we conduct a lot of interviews with a lot of firms, just really trying to figure out how does this work? Who are the main players? What not to do? And we met Paul Buckley and Kaz Yassoud from First Avenue literally last January. And what started out as just conversations, education back and forth. We learned an awful lot from them, how the markets actually function, dispelled a lot of our myths, our personal myths, and how it works. We spent probably 2-3 months just exchanging information. We were doing a little fundraise around that time. We had a discussion about First Avenue becoming a part of the business and how it would work. If you're coming from crypto, you really are from Venus and institutions are from Mars. There's such a different method of thinking. Institutions like First Avenue, if you're dealing with large credit funds and infrastructure funds, they're very structured. They work within a regulatory parameter and they also work within accepted standards. I think most crypto companies will find that quite shocking, that the pace that it runs at. And it's not necessarily a bad thing. It's quite a good thing because it's through abundance of caution that things are done. We started to formalize the relationship around the middle of the summer, and then September, October, we signed off on a deal. The deal was very straightforward. First Avenue introduced us to their GPs, the mandates that they handle, and that gives us a shot at pitching for GP business, for fund business. And then on the other side, from a distribution perspective, First Avenue are very skilled. They've been doing it for 20 years, 30 billion worth of capital raised for clients. They're going to assist in distribution. Now, they won't handle all distribution because it's horses for courses. So that's the general parameter of the deal. They're also an investor into the company now. So they have a minority stake there. So they have an interest in growing the value of the company along with the other shareholders. Finally, Kaz Yasuda, he's joined Frictionless Markets from First Avenue, has about 30 years worth of experience in the private markets and in the pension fund business. You know, to use the expression, he knows his onions. We're very lucky to have him. He's joined as the head of institutional sales. So his function is to go to GPs to articulate our value proposition, to help us win business from GPs, and then to help us set up the distribution networks that we need in order to be able to distribute tokenized securities from credit and infrastructure funds. More updates on our side. We've just yesterday actually only completed our audit with Hourigan. That was really good. 7-8 weeks to go through. We had a version 1 of our smart contracts, which is really kind of MVP, kind of did what we wanted it to do, but I wouldn't call it institutional grade. We invested heavily in that since the middle of the summer. We brought in a really strong team from Distributed Lab, absolutely superb technology team to help us get that over the line. So now what we have is we have all our smart contracts. The entire protocol is live on Avalanche. Avalanche are one of our main backers. We're very lucky to have them. All of our tokenized securities will be launched on Avalanche. We've completed that audit. The launch of the first set of tokenized institutional deposit tokens went live yesterday. So we did euro and dollar yesterday. Over the remainder of the week, we'll finish off the remaining currency ledgers. That'll be dirham, Sing dollar, Hong Kong dollar, yen, British pound, and Swiss franc. It's important just to kind of explain the infrastructure behind that. How you do it is kind of layers of a cake. First of all, we got to establish all the cash custodian accounts in Citibank. Then on top of that, we build down a service, FX service from Alpha Group, and then we have all of the infrastructure around fund accountants that ties in with that, so we can provide attestations. So when you have a deposit token from Frictionless Markets, you have an independent attestation from a chartered accountant in Luxembourg that has access to those fund accounts. So you know that your cash is fully backed. We're not like a stable coin, so we don't invest your deposits in treasuries or anything like that. We simply use it as a pass-through. Your cash is always secure within the fund accounts under the securitization laws of Luxembourg. So we sort of started with that about a year ago, setting up that infrastructure. The exciting part now is that we're starting to utilize it, right? We'll also do a bunch of FX swaps this week to prove the cost function of our FX solution. And into Q1 next year, you're going to see us tokenizing funds, actual funds, real funds, substantial funds from some of the best GPs and managers in the European Union. And that's really exciting. It's been a year of hard graft to get to year and 3 months of hard graft to get to this point. But that's what you're going to see out of us in the next quarter or two. Yeah, so look, this week we've got, we're starting to utilize the financial infrastructure that we put in place over the last year. This means that we'll have all of our currency ledgers live. Institutional deposit tokens are fully backed 1-to-1 by fiat in those cash custodian accounts, independently attested by a chartered accountant and fund accountancy practice in Luxembourg. So institutional investors are certain that the cash is there. We don't invest it on their behalf into treasuries. We're not a stable coin. It's simply a deposit token that's used for investment and settlement within the fund network. So we're excited about completing that workout this week. prior to Christmas, and in Q1 of next year into Jan and Feb, you'll see us tokenizing funds from GPs, some of the best GPs and managers in Europe in credit and infrastructure. We're just really excited about that, being able to utilize this infrastructure that we've built over the last 12, 15 months.
Wow, tokenizing funds from GPs. Yeah, I think your team is doing a great job in establishing new partnerships, and DEFYCA or Frictionless Markets is progressing very fast, and that's really impressive. You just mentioned that you're probably not the only ones doing this in the market. Can you mention some of your competitors and share with us what makes you stand out among them?
Well, look, there's lots of different companies out there now providing tokenization solutions, and the general flavor comes in two general flavors. You have technology providers that provide just the technology and do a good job at that. And then you have firms that are starting to provide basically an all-in-one solution, which is what we do. From a technology perspective, we've built down on top of a specification that was created by another Luxembourg company, Tokenization, ERC 3643, and they've done a really super job on that. It's a fantastic piece of technology. You've got lots of different firms now leveraging that specification. I think that's important, having an open ecosystem and an open source underpinning to the market function is very important. It allowed us to be able to quickly develop our solution down on top of that. You've got lots of different firms that are looking at the institutional technology space and that are providing solutions in there. There's other firms in Germany like Ayala, etc. So all good firms. You have a crypto cohort as well. So these are firms that have been providing crypto lending solutions since probably 2021, 22. They've had some measure of success. Personally, I don't think that their solutions are suitable for the institutional space. Go look at any sort of crypto private credit solution. There's plenty of them. There are good ones and not so good ones. So you've got that cohort. I think if you start looking at our space, what do? We're sort of an all-in-one shop. You're a GP, you come to us or we approach you, we offer to tokenize your fund. What do we handle? We set up the fund structures, we set up cash accounts, we appoint managers, we do all the necessary legal structuring of your fund, whether it's a feeder fund or whether it's actively managed certificates or tracker certs. We handle all of that stuff. We handle the tokenization function. We handle cash capital calls. We handle cash ops. We provide reporting, CRS, FACTA, all the usual stuff. So we're sort of a one-stop shop. So I guess you could think of us as we're a little bit of a hybrid between what a traditional fund administrator would provide and also what a tokenization solution provides. I think the benefit of that, and there are 1 or 2 companies starting to do that. You're starting to see them coming even from the United States. And you've got firms like Securitize who've been in this area for a little while, slightly different solution, but they've been there for a while. If you think about it from a GP and a manager's perspective, a large portion of GPs and managers, from a staffing perspective, they're staffed with financial analysts, they're staffed with operational people, and they're staffed with sales folks because that's their business, right? That's what they do. What they don't have are technologists. What they don't have are technology operational folks. That's where we come in. We come in into that slot and we help them to take their fund, to digitize their fund and to distribute it in token form. That is what we do. We think that form factor, that sort of all-in approach is going to be a winner, especially with managers and GPs who are still really trying to figure out the space and trying to understand, do we do it ourselves? Do we try and build it ourselves? Do we try and roll our own version of it? Do we find a partner? And it's kind of interesting. We've certainly met some GPs that have already started in this journey and has been building their own solutions. And I think there's a bit of realization that the market is forming, that there's a lot of companies now going to provide the solution that you don't necessarily want to run in-house. That's where we step in. That's hopefully where we'll tend to pick up a good bit of business over the next 12 to 18 months.
Frictionless Markets is indeed a one-stop shop. You're covering everything. So is there anything else that you would like to share about DEFYCA or Frictionless Markets?
Other than we're just very excited. We're very privileged to have investors like coinIX. We're very grateful for the support that you gave to us very early on. We will, of course, do another fundraise next year, so we'll be knocking on your door again. Overall, I would say it's really difficult to try and develop these types of solutions without very strong backers, very strong partnerships, and very strong investors that have your back. So from all of us in Frictionless Markets and DEFYCA, we're very grateful and thankful to coinIX and the team at coinIX for their support.
We're proud to have DEFYCA or Frictionless Markets in our portfolio, and thank you so much for sharing all the details about about your project. For the last question, I want to ask you, what is your message to the people who have not invested in the blockchain industry yet?
When I left university, in the late 90s, there were really only two financial products available to me. As I entered the workforce, there were only two financial products available: a deposit account and a pension fund. You roll forward 25 years, there's an incredible array of financial products available to invest in. And it's not just the public markets. I mean, you've seen a huge democratization of that. It's simple now to open an eToro account and to invest in public equities, stocks and bonds. You have the crypto markets, and you're now starting to see the private markets being made available to people. It's incredibly interesting to see how the markets have changed in 25 years. It's really incredible. And there's a lot of societal benefit in that, taking true ownership of your financial destiny. The blockchain, from my perspective, and I think anyone who works in this area would probably agree, it is the technology. It is the catalytic technology that will enable the markets to spread to every part of the globe. You still have billions of people on this planet that are underbanked or have no access to financial services. Blockchain can provide a solution to that. And you see some amazing technologies being provided and solutions being provided into the African markets. That's really cool. I think without blockchain, you certainly wouldn't see the pace of execution of those market solutions. I look forward, I know it's a long time away, but my children, as they leave university and go into the workforce, in whatever 10, 15 years time, I honestly believe that the vast majority of financial infrastructure will run on some form of blockchain technology. I think we're right about that. If you ignore these long-term trends and you ignore the capacity of this technology to change people's lives, I think you'll be proven to be wrong. It's slow in comparison to the crypto markets, which just sort of popped up overnight, right? You could launch a token, poof, you could generate a couple of $1 million. Institutional capital markets don't function like that. They function slowly, predictably, and they follow a path. And what you're starting to see now is adoption. You look at JP Morgan has done with coinIX. You look at some of the pilots that have been run on Avalanche with Citibank and Oasis Pro and these guys. They're testing the market. They're testing the technology. They're testing the guardrails. They're testing the regulatory footprint. Once they're certain that it has those benefits, you will see the mass scale adoption of tokenization, but it won't happen overnight. It will happen relatively slowly, relatively predictably, but it will happen. So I think if anyone is interested in getting into this area, you got to start understanding the power of blockchain and, maybe focus less on what the crypto markets do, right? Because the crypto markets they're interesting, but they're a bit of a whirlwind. Focus on the technology, understand what the technology does, understand what the current technology provides to markets. Within that gap analysis, you'll figure out that blockchain really is a tremendous solution to a lot of the ailments within the markets today. So look, I think that's sort of my overall view on it. You just do research, get into it, understand it. There's amazing resources on the internet. You can, over a period of a couple of weeks, become quite proficient at smart contracts. Over a period of a couple of weeks, you can become very proficient in understanding how the markets function. So you just got to really get into it, understand it. Don't ignore it. Ignoring it is not a wise decision.
Loved your answer. Indeed, it's not about currency, it's about the technology underneath. And I always say it that whether you want it or not, the mass adoption of blockchain will happen. So even if you don't want to invest, learn about it, try to be informed about it, because when you see that the mass adoption has happened and everybody are already in and you have no idea what is blockchain, then I don't think you want to be in that place. I'm done with all the questions. Thank you so much for doing this interview with me, and I wish all the best for DEFYCA or Frictionless Markets, and have a great day, Pat.
Thank you. Thanks a lot. Bye-bye.
Bye.